Hi everybody, welcome to this Wall Street News. According to the Bureau of Labor Statistics, US unemployment rate edged down from 3.9% in February to 3.8% in March. In addition, US employers added 303,000 jobs in March, indicating strong US economy. Fed Governor Michelle Bowman said on Friday, quote, "We are still not yet at the point where it's appropriate to lower the policy rate, and I continue to see a number of upside risks to inflation," end quote. Federal Reserve Bank of Dallas President Logan said on Friday, quote, "I believe it's much too soon to think about cutting interest rates," end quote. 10-year Treasury yield jumps to 4.42% after the U.S. jobs report. S&P 500 added 1.11% on the strong U.S. economic data. The Bureau of Labor Statistics released March jobs report on Friday. If you look at the household survey data, you can see the unemployment rate fell from 3.9% in February to 3.8% in March. Another good thing is the labor force participation rate increasing from 62.5% in February to 62.7% in March. According to the establishment survey data, total non-farm payroll employment rose by 303,000 in March, much higher than market forecast, 200,000, indicating strong U.S. economy. In addition, average hourly earnings for all employees increased from $34.57 to $34.69 in March, 0.3% increase month over month, 4.1% increase over the past 12 months. Rising average hourly earnings are likely to have a positive effect on U.S. consumer spending in upcoming months. According to CME Fed Watch tool, the probabilities of June rate cut fell below 50% after the strong jobs report. 1 month ago, the probability of June rate cut was 57.1%, then decreased to 55.2% 1 week ago, and 50.8% on April 5th, last Friday. Now the probability is less than 50%. Michelle Bowman, a member of the Federal Reserve Board of Governors, discussed monetary policy at an event in New York, said, quote, "If the incoming data continue to indicate that inflation is moving sustainably toward a 2% goal, it will eventually become appropriate to gradually lower the federal funds rate to prevent monetary policy from becoming overly restrictive. However, we are not yet at the point where it is appropriate to lower the policy rate, and I continue to see a number of upside risks to inflation. While it is not my baseline outlook, I continue to see the risk that at a future meeting we may need to increase the policy rate further should progress on inflation stall or even reverse." Dallas Fed President Logan delivers remarks at Duke University last Friday, said, quote, "I'm increasingly concerned about upside risk to the inflation outlook. To be clear, the key risk is not that inflation might rise, but rather that inflation will stall out and fail to follow the forecast path all the way back to 2% in a timely way. I believe it's much too soon to think about cutting interest rates. I will need to see more of the uncertainty resolved about which economic path we're on," end quote. She also talked about the quantitative tightening, said, quote, "Reducing our asset holdings also removes liquidity from the financial system. Overly rapid reductions in banks' reserves could outpace money markets' ability to redistribute to the banks that need them most. That will risk pressures that could force us to stop balance sheet normalization prematurely. So I believe it will soon be appropriate for the FOMC to decide when to slow, not stop, the runoff of our asset holdings. End quote. 10-year Treasury yield jumps to 4.42% after the strong jobs report. For the US stocks, S&P 500 rose 1.11% on strong US economic data. Dow also added 0.8%. Tech-heavy Nasdaq jumped 1.24%. This is end of today's news. Thank you for watching. Have a great day.